IREN stock bounced back strongly on Thursday, closing the session up $3.76 or 6.26% to finish the day at $63.85 per share. After a brief pause on Wednesday, this marks a powerful return to form for one of the strongest performing AI infrastructure stocks in the market right now. Today's rally confirms what many investors suspected, that yesterday's dip to the $60 level wasn't the start of a reversal, but rather a healthy pause before the next leg higher. The bulls are firmly back in control, and the momentum that has carried IREN into new all-time highs over the past 2 weeks shows no sign of fading. The stock's rebound comes amid a broader recovery across the AI and tech infrastructure sectors, as investors rotated back into growth names following renewed optimism about upcoming interest rate cuts. While the overall market traded higher, IREN once again stood out with outsized gains and heavy volume, suggesting that institutional accumulation is continuing underneath the surface. This wasn't just a bounce driven by retail traders chasing headlines, it was a confident, technically strong session backed by real demand. For those following the story closely, today's price action reinforces just how solid the $60 support zone has become. Earlier in the week, IREN briefly dipped below $61 after back-to-back rallies of more than 20% combined. That pullback was met with immediate buying interest, and now we're seeing the payoff. When a stock climbs rapidly, it's natural to expect profit-taking, but when it rebounds this quickly, it tells you that conviction among investors remains high. $60 now appears to be the new base, a platform from which the next major move could develop. So what's driving this renewed strength? There are several key factors that likely contributed to Thursday's rally. First, the company continues to benefit from the afterglow of its recent AI cloud contract announcements. Earlier this week, IREN revealed that it had secured multiple multi-year AI cloud agreements with major enterprise customers. Those deals cover around 11,000 GPUs and represent roughly $225 million in annual recurring revenue once they're fully operational. That figure changes the narrative completely. Instead of just being a Bitcoin miner pivoting into AI infrastructure, IREN is now an established player in the GPU-as-a-service market. It's a company that's turning its hardware advantage into consistent, contractual income. The market is still digesting what this means for valuation. Historically, AI infrastructure companies with recurring revenue models trade at much higher multiples than Bitcoin miners. As investors re-rate IREN through that lens, you're seeing the stock catch up to its new story. Thursday's rally is a continuation of that repricing process, one that's likely not over yet. The second factor behind today's move is clarity around the company's $875 million convertible notes offering. Initially, this announcement created some volatility as traders worried about potential dilution. But the market now appears to have moved past that concern. Investors are viewing the capital raise as a strategic move to accelerate growth, not as a red flag. The proceeds from this offering will allow IREN to expand GPU deployment more aggressively, scale its AI cloud capacity, and continue investing in high-efficiency data centers. This funding provides the runway to support the next phase of expansion, one that could see total GPU capacity climb well beyond the current 23,000 units already on order. In other words, the convertible note financing is helping the company play offense, not defense. By raising funds from a position of strength, IREN can capitalize on market demand for AI computing power while maintaining control of its long-term strategy. And that's exactly how investors are starting to interpret the move. Another factor worth noting is the strength of the broader AI sector. Nvidia, AMD, and Supermicro all traded higher today, and that sector-wide momentum provided a favorable backdrop for IREN. When leaders in the AI infrastructure space are green across the board, it tends to lift sentiment for companies that operate in adjacent areas like GPU hosting and high-performance computing. Investors are looking at IREN as one of the few pure-play public companies that offers direct exposure to both the AI compute boom and Bitcoin mining cash flow. That hybrid model continues to differentiate it from peers. And that dual-engine model really is the key to understanding why this stock has caught fire. On one hand, IREN's mining operations remain profitable and provide consistent cash flow. On the other, the company's AI cloud division offers exponential growth potential as it ramps up contracted GPU utilization. These two business lines complement each other perfectly. Mining revenue supports ongoing operations and reduces the need for constant equity issuance, while AI cloud revenue provides the scalability and valuation multiple that traditional mining firms lack. From a technical perspective, today's rally also signals strength. The stock rebounded precisely where it needed to, right at the $60 mark, and closed near session highs. That's classic bullish behavior. Volume confirmed the move, with turnover well above the weekly average. The pattern forming now resembles a bull flag, a brief consolidation followed by renewed upward movement. If this setup plays out, the next logical price target would be in the $70 to $75 range, which aligns with several analyst projections, including Bernstein's $75 target. Speaking of analysts, sentiment around IREN continues to strengthen. Bernstein has maintained its outperform rating, citing the company's unique position in the AI infrastructure space. IREN Research has also reiterated its buy rating, emphasizing IREN's early mover advantage in securing Nvidia GPUs. These endorsements help validate the company's long-term potential and give institutional investors confidence that this isn't just a short-term momentum trade, it's a company building durable competitive advantages in a fast-growing market. One interesting technical dynamic still in play is the short interest. Current estimates put short interest at around 10 to 12% of the float. That's high enough to create tailwinds for further upside if momentum continues. As the stock climbs and those short positions become more painful, you can see short covering add to the buying pressure. That's likely part of what's happening now. Traders who bet against IREN earlier in the year are being forced to cover as the company's fundamentals continue to improve. The macro environment is also helping. Bond yields edged lower on Thursday, and the broader market rallied on renewed optimism that the Federal Reserve remains on track to deliver more rate cuts later this year. Lower rates generally boost growth stocks, especially those with long-duration earnings stories like AI infrastructure plays. For IREN, that translates into an even more favorable environment for multiple expansion and capital access. Looking ahead, there are several key things investors will be watching. The first is execution, how quickly IREN can ramp up its AI cloud contracts and start generating recurring revenue from those GPUs. The second is expansion, updates on new customer partnerships or additional GPU orders could provide fresh catalysts. The third is operational progress. As more data centers come online in Texas and British Columbia, investors will want to see utilization rates increase and operating margins improve. Each of these milestones will serve as validation that the company's pivot to AI infrastructure isn't just narrative, it's real business transformation in action. There's also potential for positive sentiment to build as the AI sector enters its next earnings cycle. If Nvidia or other GPU manufacturers deliver strong results, that tailwind often extends to companies like IREN that depend on the same ecosystem. Given the strong demand for GPU compute capacity, that environment looks increasingly likely. In the near term, the technical picture looks clean. As long as IREN continues to hold above $60, the trend remains firmly bullish. The next resistance area sits around $65, followed by $70. If the stock can sustain this week's volume levels, those levels could be tested sooner than many expect. What's most impressive here is that despite all the volatility and rapid price appreciation, IREN continues to behave like a strong, trending stock, respecting support levels, attracting dip buyers, and responding positively to macro tailwinds. So where does this leave us heading into Friday and beyond? In a strong position. Today's rally essentially confirmed that the pullback was temporary and that the broader uptrend is intact. The combination of strong fundamentals, renewed momentum, and institutional support suggests that the next leg higher could already be underway. For investors who missed the first breakout above $50, this current consolidation zone between 60 and 65 could be the new accumulation phase. In the bigger picture, IREN remains one of the most compelling stories in the market. It's a company redefining what a mining and infrastructure firm can be, blending the scalability of AI cloud services with the stability of Bitcoin mining operations. With demand for compute power skyrocketing, access to Nvidia hardware secured, and a growing backlog of AI cloud contracts, IREN is positioned right where the market is headed. In summary, Thursday's 6.26% gain to $63.85 per share shows that the market still believes in IREN's story. The company continues to execute, the fundamentals remain strong, and the technicals point to further upside potential. Today wasn't just another green day, it was confirmation that the rally has legs. As long as the stock continues to hold above its breakout zone and deliver on its AI cloud milestones, the outlook remains bullish. This feels less like a short-term momentum story and more like a long-term structural revaluation. Investors are waking up to the reality that IREN isn't just riding the AI wave, it's helping to build it. And that's a powerful place to be.